Hi, this is John Prasinos, Editorial Director of Investing Daily, with a video presentation for Monday, November 1. To view our full range of publications, visit our website at investingdaily.com. Also visit the website of our subsidiary, streetauthority.com. Well, even though October is historically a bad month for stocks, the final trading day of October, which was last Friday, closed with gains for the week and for the month. For the markets, October was more treat than trick. For the month of October, the Dow Jones Industrial Average rose 5.8%, the S&P 500 gained 6.9%, and the tech-heavy NASDAQ gained 7.2%. October marked a rebound from September, when the major indices fell for the month. Last week, signs that President Biden's infrastructure plan would pass after all, combined with solid third-quarter operating results from the S&P 500 so far, helped drive the major indices higher for the full week. Take a look at the following table. As you can see from the table, stocks rose last week, but they fell across the board in September, with the S&P 500 falling 4.8%. However, instead of presaging a continued decline and full-blown correction in Q4, as many pessimists have feared, it's turning out that September's pullback was a pause that refreshed. Despite earnings misses from big tech stocks such as Apple and Amazon, the tech sector is generally thriving as demand for tech products and services continues. What's more, those tech stumbles are likely transitory and due to supply chain bottlenecks that are on their way to getting resolved. We also saw a decline in volatility last month. The CBOE Volatility Index, the VIX, aka the Fear Index, declined to about 17, roughly in line with readings before the outbreak of the coronavirus pandemic, further supporting bullish sentiment in the markets. Take a look at this chart. That means market breadth also is improving as the rally broadens to include smaller stocks outside of the mega-cap FANG plus M coterie. We're witnessing growth among both growth and value stocks. Another sign of improving market breadth, the New York Stock Exchange Advanced Decline line, the NYAD, has broken out of its trading range to hit new highs. A major tailwind for stocks has been Q3 earnings season. To be sure, a few tech story stocks stumbled, but results for the S&P 500 generally are coming in strong. Investors also are pleased that political dysfunction is abating on Capitol Hill, and the White House is actually on the verge of getting fiscal stimulus passed, albeit at a trimmed-down $1.75 trillion price tag. It seems that compromise isn't dead in Washington, especially when the issue at hand is lots of new pork for the constituents back home. For Wall Street, the icing on the cake is that big tax increases on the wealthy and corporations probably aren't in the cards, and other revenue-generating schemes will likely get implemented to pay for fiscal stimulus. The rate of COVID infections is declining. The economy is rapidly reopening. Consumers are spending. Corporate profits are soaring. It wasn't a spooky October, as the consensus had predicted. Fourth quarters historically are favorable for the stock market. With consumers sitting on a huge hoard of household savings, we'll see what Santa has in his bag for investors over the final stretch of 2021. The Federal Reserve is about to begin tapering its asset purchases, probably sometime this month, but don't forget that interest rates are still scraping historic lows. The Fed's policy rate won't get boosted anytime soon. Low rates, rising home prices, and fatter 401k plans are likely to loosen purse strings for the extremely important holiday shopping season to come. I've continually made it clear in my Mind Over Markets columns that technological innovation is a key pillar of this bull market. Tech companies that thrived during the pandemic will do even better in the post-COVID world. Our investment team has unearthed a tech play that's poised to take off, but it's flying underneath Wall Street's radar. To learn the details about this opportunity, click this URL that appears on your screen. Well, that does it for now. Thanks for watching, and please have a profitable week.